expect continued volatility for the rest of the year, driven by the numbers we get on economic activity, whatever happens with vaccine progress and election headlines. Of those things, what do you think is going to drive that volatility to the up or the downside the most?
I think economic activity is the one thing that's going to continue to be the major driver. As we saw last week, there's been a big gap between the direction of the market and the economy. And that gap started to narrow when you saw economic news continue to surprise to the upside. So the market predicted the V-shaped recovery, and we're starting to see that play through with the numbers that we saw last week.
Yeah, David, in a note last week, you pointed out that though we're seeing the surge in coronavirus cases, we're not really seeing a surge in death rate. Hospitalizations are up. We'll see where that goes. How much is your focus on those metrics as you start to get a sense of what economic activity is going to look like and how the markets might react in this back half of the year?
I think those discrepancies are very important for the market. The market's extremely focused on that sort of what seems to be a breakdown a little bit, and it's the idea that the virus may not be as nasty as we had feared 3 months ago. We are waiting and seeing, of course, and the epidemiologists know much more than the economists. But that feeds the economic data. That feeds the shutdowns, the lockdowns, the Fed reactions, everything. So we're waiting on that, and I think the news. So far, we seem to have maybe gotten a little ahead of ourselves with lockdowns unwinding in certain states, and that's rolling back. But so far, knock on wood, the news with regards to things like mortality rates are extraordinarily positive. But we know there's lags, and we're all, at least on the economics and strategy side or the finance side, flying much more blind than we like to normally. The good news is we have the Fed, and the Fed has been extraordinary in this time in terms of coming in and providing liquidity and aiding the markets in times where we freak out on the stresses associated with what's going on in the virus. And that's been, I think, the dominant factor for markets, hands down.
And we've talked a lot about what's been leading the comeback, and that is big tech, some pretty stellar gains this year. Does that continue in the second half, especially? Yesterday we actually got a date for the CEOs to testify in the antitrust hearings. So does big tech continue to lead, and what does that say about the market?
I do think big technology continues to lead because it does provide the best growth and the best cash flow. But I do think that our managers are looking to find balance in their portfolio. They're focused on building resilient portfolios that can outperform over a long period of time. They're not traders. And so they're balancing that out. They're investing in industrials, materials, healthcare, as well as technology. And we're also seeing significant underweights in energy, banks, and hospitality. But I think what it says about the market is there's a scarcity of growth. And investors are looking for that growth, and they're looking to see where that growth can come from, regardless of what happens over the next few months with the virus.
David, what do you do with emerging markets when people are looking for portfolio balance, and yet it's unclear what the depth and sort of lasting impact of this pandemic is going to be there, plus the strength of the dollar? How much do you put into emerging markets?
I've been reluctant to.
Well, it seems our stream is reluctant to let you tell us as well. You sort of froze up for a moment there. Are you back?
I think I am. Is it okay now?
Yep, it is.
Yeah, I was just saying a lot of that depends on the dollar, and we've seen some dollar weakness, and I think that's given the emerging markets the boost that they need to get out of some of the difficulties they've had. But I'm not ready to jump in and say that's the trade over developed markets. I still like the U.S. equity market. I like the U.S. story, and I'm sticking with that. And a lot of that again goes back to my previous comments on the Federal Reserve. I think we've had a central bank that's really done an amazing job on this one. So I'm sticking with the U.S. equity call over an emerging market risk asset call for this point.
Okay.